In the meantime, the Organisation for Economic Cooperation and Development has come up with some upbeat forecasts for South African growth, but it's urged the authorities to do more to make the rand more competitive. It also says our unemployment problems have to be addressed. Joining with their views are Monale Ratsoma, economist at Thebe Securities, and Cosatu spokesperson Patrick Craven. Gents, thanks very much for coming in this afternoon. Monale, the OECD looking for growth of 5% this year, and that sounds pretty good, but it's not enough to create enough jobs to lower our unemployment rate by much, is it?
Well, I think in the actual figures, they're projecting about 3% growth this year and 5% next year. And that's where they're saying that 5% next year will still not be enough. And the 3% is very much in line with what many analysts, including myself, are expecting for the year. The most interesting thing, of course, is the fact that since the beginning of the year, we've been revising these numbers upward at every single opportunity. So it looks like it could be a much more upbeat year than the current consensus actually entails.
And the 5% for next year, because even the Finance Minister, Pravin Gordhan, said that sounded a bit rich for him, and he was looking for a lower number than that. Do you think we could achieve 5% next year?
I think it's going to be very difficult to get to 5%. I think as you're looking at fundamentals currently, there's still a lot of uncertainty about how the global economy is going to perform. Interesting that we're talking now with a report on the back of OECD released yesterday. OECD economy is most likely going to be under severe strain for the rest of 2010 and into next year because of the debt issues. So if that economy does not, or those economies don't perform, you could expect that we won't be exporting as much. So clearly, I think as we go further out, it becomes even much more uncertain as to how the economies are going to perform. And I think 5%, if we do achieve, will be a very good number. But I think the risk are that we might end up in the region of 4%.
Patrick, OECD says we have to tackle unemployment. We have an official unemployment rate of just north of 25%. The OECD says 30% is a more realistic number, and I'm sure you would say an even higher number than that. What should we be doing to tackle this unemployment if the growth isn't going to be enough to create enough jobs?
Yes, I'm glad that they have recognized what we've been saying for a long, long time, that unemployment is absolutely crucial, because even the economic growth we've seen recently has accompanied a further loss of jobs. And we will shortly be releasing a comprehensive policy statement. But it's very much in line with the government's own industrial policy action plan, which recognizes the need to transform the whole basis of the economy to one that is far more based on manufacturing industry rather than the export of raw materials. And obviously that's a long-term solution, but it's the only way. But there are certain short-term measures that can be taken, and I'm particularly pleased that the OECD has recognized that the overvalued rand is a problem, which again is something which we've been saying for a long, long time, and which many South African economists have disputed. It's clear that what manufacturing industry we do have is not as competitive as it could be, partly because of the overvalued rand, and also the tariffs which discriminate against developing countries, particularly the European Union and North America. And so I think we do need to see a fundamental change in the world trade regime to open up the playing field for developing countries, so that we can then, having shifted towards manufacturing, can get a market for those manufactured goods, which I'm convinced will be competitive, given the overall state of the South African economy.
Monale, the rand overvalued. What's your view on that?
Well, it's quite interesting. I mean, Patrick has obviously been involved in this, and he's also been mentioning sort of levels that they would want to see the currency at. And I mean, it's quite difficult to really ascertain how to arrive at a competitive exchange rate. And the studies that I personally have done, they tend to say that, you know, with the weak currency over time, there hasn't really been evidence that says your manufacturing export tend to benefit. In effect, what tends to happen is you need to weaken the currency, and you have maybe an initial effect, and constantly you have to keep on depreciating the currency to have a long-term benefit. This is if you have not changed your economy structurally. And I think this is where the industrial policy action plan actually speaks to where we have to go medium term to long term in terms of making sure that the structural economy is such that, you know, we can have real benefits from a manufacturing point of view over a long term, rather than trying to tackle the currency. Something that I don't personally believe it does not work.
Well, let's hold that thought for a moment. Kumba Arnor and ArcelorMittal South Africa had what's been described as constructive talks yesterday on a pricing dispute that's been dragging on since February. The dispute came to a head last week when Mittal threatened to close its Saldanha steel mill and shed thousands of jobs in response to Kumba's ultimatum that Mittal pay upfront for iron ore from its Sishen mine. The Industrial Development Corporation is a big shareholder in both of those listed companies, 13% stake in Kumba, just short of 9% in ArcelorMittal South Africa. IDC CEO Jeffrey Craven joins us on the line now. Jeffrey, good afternoon.
Good afternoon.
Well, Jeffrey, it looks like government intervention may help to resolve this dispute. As a shareholder, what's your part been in trying to come up with a solution to this?
Well, naturally, these are two key companies in the economy of South Africa. So I'm hopeful that with the government having taken the role that they've taken, that a solution which will be lasting will be found. Naturally, as shareholders, I think our stance is we don't like to get involved in the running of those businesses. And that is why we have not been involved in that, because we want to allow people to have the confidence that when we are shareholders, they will have the space to run their businesses. I think both companies know the importance of the role that they have to play, and that it is important that they find a solution which South Africa Incorporated does not come second best.
Well, I think you listened to the end of our previous conversation. We were talking about the Industrial Policy Action Plan. Patrick Craven from Cosatu was mentioning it and saying that we need to be manufacturing more in this country. And of course, we had ArcelorMittal last week threatening to close down Saldanha Bay or Saldanha Steel and also shed jobs. Now, that's not something we would like to see. That would be the last resort, I would think. What do you think would be a happy outcome to this whole situation?
Well, for us, a happy outcome would be for them to reach a point where no jobs are put at risk. I don't think, particularly in this time where we've lost so many jobs because of the economic crisis, we can afford to shed any one job loss is just too much. And that's why I say I know they understand the critical role each company plays in this. And I think it's against that I'm hopeful that they will come up with a solution where no jobs should be lost.
As a shareholder, though, what would the solution best be for you?
Well, for a solution that will be sustainable for the two companies. I think the reference to the Industrial Policy Action Plan is very key. We are very central to that, and we want to continue to create new jobs. Kumba and equally so ArcelorMittal is key in the realization of the aims of the Industrial Policy Action Plan. So a solution that is sustainable for us is for both of these companies that they come up with a win-win situation. And I think people will rise above all of this and put South Africa Incorporated in front.
Is there something wrong with our steel manufacturing industry if ArcelorMittal says it would be unprofitable manufacturing steel if it has to pay $50 a tonne for iron ore? Because we have companies overseas who are producing steel at far higher input costs than that.
Well, I don't have the numbers in terms of how much they would need, how much they can afford to pay, because there's different types of shareholders equally so. But I don't run the business, so I wouldn't have it on top on my tips. I think if there's a genuine discussion between the two parties, and I would like to, and I hope that there will be indeed a genuine discussion, and then a price that will be acceptable to both parties should be able to be reached.
Is the steel industry something we should be focusing on and developing as a country under IPAP in that case?
No, the steel industry is very key. I mean, I think you have to look at not only the role it plays directly itself, but the impact it has on the downstream businesses. I think it is very important that we have a strong steel industry that is able to pass the benefits to all the other downstream activities. Because if we want to attract manufacturing here in South Africa, we have to ensure that we have the capabilities of producing the raw or the inputs to those manufacturing sectors.
Then also, if we want other companies to come into South Africa and invest, we need to have clear regulations set out for them, don't we, Jeffrey? Because there's also confusion hanging over the rights to the Sishen iron ore mine at this stage, with Imperial Crown Trading being granted a prospected license. Do we need more clarification on this as well?
Well, I would imagine the regulators in that regard will have to answer that question. And I think government is involved in that. I don't think I'm qualified to do that. But I think it is always good that we have clear rules that needs to be respected, that each party knows what the rules are. So, but I mean, the regulators in that respect, I think they can answer that. But I think it is important that those rules are respected either way. Yeah.
Jeffrey, I have to leave it there. Thank you very much for making the time this afternoon.
Thank you very much.
That's Jeffrey Clare, now the CEO of the Industrial Development Corporation. Back to our guests in studio, Monale Ratsoma from Thebe Securities, Patrick Craven from Cosatu. Monale, the steel industry, a key one for South Africa?
You know, very much so. I think it's also because we had that report from OECD yesterday. One of the contents there was on competition in South Africa. And this saga with Kumba and ArcelorMittal is a very good example of a marriage that is based on uncompetitive behavior, how it's most likely going to end. And it's one of the barriers that I think we currently suffer from in terms of entrance into industries. Because now, essentially, it says that if you really want to tap into the iron ore supply industry, then such pricing mechanisms are always going to put you out. And I'm quite clear that something seems most likely going to happen this time around.
Patrick, what sort of resolution do you think we should see here? Because it looks like ArcelorMittal has been holding the country over a barrel. It looks like they haven't always been fair with their pricing, adding surcharges on. Do you think that we get to see clarity on this whole issue and that we're not going to shed thousands of jobs?
Well, certainly in the short run, we want to make sure that those jobs are saved. But I think this episode illustrates precisely what is wrong with seeing privatization as a solution to the country's problems.
Because are we going back to ISCOR, which used to be a public company?
Obviously, ISCOR had its problems, but what we've seen is the replacement of a public monopoly with a private monopoly, a particularly rapacious private monopoly, which has exploited its position to buy iron ore very cheaply and then to sell its finished products at the world market price, which doesn't in any way reflect the real cost of producing them, and is now crying foul when this comes to an end. It's clear this is not competition, as we're always told privatization will lead to. It's a monopoly situation, and I think we have to find a much better way of organizing our steel industry, even if it means going back to nationalization, which has its problems, but I think it will be far better for the long-term future of the industry, and certainly for the protection of those jobs.
Do you think this is a case of privatization gone wrong, or do you think there's just been a few hurdles in the way that we haven't paid enough attention to here, Monale?
Yeah, I think the regulation. I think privatization is all good and well, and I fully subscribe to it. But if it's not properly regulated, it gives birth to industries such as this and practices such as this. I mean, you have the same situation with the cartels in the bread industry, milk industry, and all of those. And it just speaks to the fact that if you don't properly govern and regulate these industries, then you're always going to suffer the consequence that is creating additional barriers to entry for other who would like to enter those industries.
Perhaps moving on just slightly because we're running out of time. Monetary Policy Committee starting this afternoon, winding up on Thursday afternoon with their interest rate decision. Patrick, I'm sure I know what you'd like to see coming out of that, but why don't you tell us?
Well, it would appear the OECD is now saying the same. And it's interesting that it's no longer just Cosatu, but a lot of manufacturing industrialists are now saying exactly the same, that we need a dramatic reduction in interest rates.
Dramatic? How much is dramatic?
Well, it's always difficult to give a precise figure, at least 1 point, even more if that's possible, in order to give a stimulus to potential investors and to save existing jobs where companies may be on the brink of closing down. If we can cut their interest rate costs, then I think it could be a turning point in the unemployment situation in this country.
Monale, what do you think we should be doing on Thursday, and what do you think we will do?
I think everything looks fairly balanced now. I mean, we've got retail sales that are now gaining momentum, 4.6% year-on-year growth in the month of May, after contracting the whole of 2009. We've got inflation fairly 4.5, 4.6. I think that's quite steady. And there's also risk from an administrative prices point of view that inflation potentially as we go towards the end of the year could start ticking up. From that, I think prudency says let's just leave rates on hold for now.
And just perhaps on the OECD talking about weakening the rand, accumulation of reserves, do you think that's enough? Do you think we should be doing more if we want to see the rand weaker?
Well, I mean, accumulating reserves is a very costly exercise, and you have to do it steady. Obviously, your means have to allow you. But if you're going to say you're weakening the currency, you might just really spark a round of attack on the currency. So it has to be quite steady. I mean, verbal intervention has come through, and now just the mere notion that there's buying of US dollars in the market in itself is there to discourage those that want to go short US dollars against the rand. So there's a balance in the mechanism, but aggressively saying we want to buy and weaken the currency to 12 rands, I think it might even become a self-fulfilling prophecy and takes the currency to 20 rands to the US dollar, who knows?